Well, hello everyone. It's April 21st, and as I always say, let's get into it right now. So, news of the day is going to be existing home sales. That's going to be coming out in about an hour and change. As far as the petroleum status report tomorrow, don't think that's going to be a big factor because we already know the status of crude oil, and I don't think this report is going to make a big difference because there's just so much supply in the world. It's amazing. The big data is going to come out Thursday and Friday, but I am anxious to see what the existing home sales report will take into account because this report will fully take into account all of the coronavirus, or at least give us a really good picture of how home sales have been doing in light of the coronavirus. Historically, whenever we have some type of unforeseeable event, and it's not directly related to real estate, the typical scenario is we see the real estate market completely shut off, just cut off, the volume 1/10, and then it resumes. But price doesn't change a lot, so it'll be very interesting to see how things go. Now, the big story over the last few days is oil, crude oil. The market for crude oil was in turmoil on Tuesday. That's today actually, with one contract trading below zero the near term as investors are worried about full storage facilities and a collapse in demand as the pandemic leaves factories, automobiles, and airplanes idle. Now, the extreme volatility in energy highlights investors' broad concerns about the duration of the coronavirus outbreak, very, very much so, and its impact on the economy, weighing on financial markets more broadly, including stocks. And that's exactly right. That's what I'm about to get into right now. The U.S. benchmark settled at a negative 37.63 per barrel on Monday, an unprecedented event in energy markets, which reflects the fact that storage facilities are struggling to cope with the huge and sudden plunge in global demand, which is this month forecast to hit the lowest level since mid-90s. On Tuesday, the cost to have a barrel of U.S. crude delivered in May was at a negative $7.40. Now, keep in mind something. The S&P 500, which what we're looking at right now, there are a lot of energy companies in that. For example, these are the 10 main sectors of the S&P 500. Now, some will tell you there's 11 sectors, info technology, but I would just chuck that into the technology sector. But again, there is 11, technically, if you want to get technical, there's 11 sectors. But I just break it down into 10. Now, interestingly, notice the S&P 500 doesn't just have healthcare and technology. It has a lot of stocks that are weighting the market down, like energy stocks, financial stocks with interest rates being near zero, industrial stocks, and possibly real estate stocks if we find out that existing home sales are lagging in just a little bit. So that's what you need to keep in mind right now. Now, I'm expecting the S&P 500 to cool off a little bit because of the energy market and the fact that coronavirus is now having an impact on earnings. And earnings are finally here. We're just getting into the banks and financials, but over the next 3 weeks, 2 to 3 weeks, we're going to get into the meat of the S&P 500. And I'm expecting worse than the analysts are seeing right now. I'm expecting a bloodbath, and I just can't see the market trading higher over that time. We may rally a little bit afterwards, but over the next few weeks, we gotta hold tight. And again, I don't think crude oil companies that are in the S&P 500, and if you look at the S&P 500, let me just give you a little example of what I'm talking about, and so you could actually see what I'm talking about. So this is the energy sector right here. And look at the constituents. Constituents, it's a fancy word. Now, what's interesting is it's made of about, let's see here, probably about 30 stocks. What do you think, about 30? Give or take. But about 46% of that sector is made out of Chevron and Exxon. Literally, if you have Chevron and Exxon, you own like 46% of the XLE sector. But again, there's all these other stocks making the rounds, and you could see their percentage. And overall, the reason why I'm showing you this is because most of these stocks, I think all of these stocks, or at least I would say 90% of these stocks are in the S&P 500, and with energy markets going down, it's going to have a major impact on the price of oil, which will drag the overall S&P 500 down. This is the futures contract. We're at 24.55 right now, and I'm expecting the futures to go down all the way to 24.15. Now, if you don't trade the futures and you trade the SPY ETF, then I'm expecting us to go to about the 245 level, and you can see there's already a line drawn there because we've been expecting this for the last few days. We've never hit the 200-day moving average, and while the Nasdaq crossed above the 200-day line, as you could see here, and the 50, and notice the 50 and the 200, they never crossed each other. That death cross we saw didn't happen in the Nasdaq because the Nasdaq does not have all of these stocks right here: the utilities, the materials, the real estate, the industrial, the financial, and the energy stocks. It's mostly healthcare, technology, and consumer discretionary, and that's lifting the market higher. So over the next few days or possibly weeks, as long as the crude oil sector continues going down, I believe it's going to have a major negative impact on the stock market. If you look at the graph of the crude oil sector, you could see what I'm talking about. Every time it bounces, it just comes back a little bit, and then it comes back up. That's called a dead cat bounce. Now, today is Tuesday, and Tuesday we talk about the best sector. Well, I've got something better for you today. I'm not so sure about the healthcare sector because the stock market is turning lower right now, but one sector that I don't like for sure is the energy sector. And here's the cool thing about the energy sector. As a matter of fact, this is really cool about any sector. We don't have to trade the short side. We can reverse that sector and trade to the long side. So this is an inverse oil ETF. Ticker symbol is DTO. And this is what crude oil is doing, but instead of trading it to the downside, you trade it to the upside. You don't have to go short. It's actually the opposite of this. It's not exact, but it's almost exact. It's double leveraged, and you could trade crude oil. It doesn't have options, but you could trade crude oil with it. And there's also this one right here, and this one does have options. This is the ultra short UBS crude oil pro shares, ticker symbol SCO. I wanted to pick the two most popular or the two most liquid ones for you, but here you could trade options with this. You could trade, as crude oil continues moving lower, these two assets, this SCO asset and the DTO asset, will continue trading higher. So there's many ways to skin a cat. And in terms of crude oil, you can trade crude oil. You could trade the short side of crude oil without getting your fingers dirty. You can short crude oil without going short. Now, if you don't mind going short, and going short is fine, or you can buy a put. There's plenty of puts. Just go to options. You can just do the Energy XLE. But again, a lot of traders are in an IRA account, 401k account. They don't like shorts. And again, today's Tuesday. Tuesday we highlight a sector, and I'm focused on crude oil. But again, I recognize a lot of you don't want to trade the short side. Ticker symbol SCO, ticker symbol DTO will get you through the day without having to lift your short finger. And again, be careful out there, because I think this crude oil is going to have a major impact on the S&P 500, which is already curled. And it's been moving up for about a month, recovering from that rally we've seen. From the correction we've seen. We saw the S&P go from, this is the SPY, go from 340 to about 217, all right, and then recovered about halfway. But again, we didn't hit the 200-day moving average. The 50-day now is below the 200-day moving average. Very different. See, notice this cross, and notice the 50 days now below. Here's the three factors that I'm looking at. A, price never reached above the 200-day moving average. B, we have a cross where the 50-day is trading below the 200-day. The blue line is the 50-day. The ugly mustard-colored line is the 200-day. And they crossed. And the fact that the price action never hit the 200-day or above is bad. Now, if you look at the QQQ, it looks totally different. Not so much better, but price is above the 50-day moving average, and the 50-day is above the 200-day, and they never crossed each other. So if you're going to go long, going long the QQQ may not be the worst idea, but I would wait for this pullback with energy market to finish off, because there's at least 40 here. Let's see. Look at all these energy stocks in the S&P 500 that are pushing the S&P 500 lower. So I would stay away from the S&P or do the XLE short or buy the SCO, or buy the TDTO. Now, I've got something big for you today, folks. Really, really big. The world's number one, not number two, not number three, number one pre-market expert and I just cracked an all-new style of trading. You're going to love this. You are going to love this. We've developed a way to spot which stocks, get this, which stocks are likely to deliver the largest gains every single day before the 9:30 bell rings. Now, you get to trade these stocks after 9:30, but we pick these stocks, we give you heads up, we do all our analysis before 9:30 bell rings. It's giving everyday traders the chance to earn up to 1,139.67% on their money. Can you imagine if you made 1,139%? That's 11 times your money. $1,000 can turn into $11,000. That's huge. It's a huge unfair advantage. And if you haven't seen our presentation yet, click the link below or the button at the end of this video. You don't want to miss this out. I mean, folks, you are going to love this. We watch the overnight markets. We watch the foreign markets. We watch to see what the market will do after the open, but we figure it out before the open. So you're never in a rush. You're never in for a surprise. You always know everything ahead of time. Ahead of time. That's the key. The key to making money is to knowing what to do ahead of time. Follow the link below or follow the button at the end of this video. Do it now. And folks, if you enjoyed these videos, let me know. Comment on the video below. Send me an email, support@marketgeeks.com. Let me know if you're getting something out of these. Have a good day. Bye, guys.